Oil's suffering a historic collapse today after Saudi Arabia shocked the market by launching a price war against its one-time ally, Russia. The Kremlin's decision not to agree to production cuts led the Saudis to massively increase their production, which sent oil prices plummeting. And this came as a huge hit to U.S. producers, many of whom can't make a profit at these low prices. Now, let's bring in former Shell Oil President John Hofmeister. He's on the phone with us. So, John, you think this was a direct attack by Putin against our successful oil producers? Make your case.
Yes, Putin is very angry at the success of the United States, plus compounded by the sanctions that the U.S. has placed upon him. Now, he's also intolerant of a crown prince half his age telling him what he should be doing with OPEC. So Putin's on his own here, and he's not afraid to challenge the United States shale industry, nor is he afraid to embarrass the crown prince of Saudi Arabia. So we're in for a pretty rough time in the coming months.
And John, question for you. We've seen an awful lot of these oil price wars in the past. One thing that has not changed is that Russia is very dependent on oil revenues. 40% of their budget is from oil and gas exports. How can they really survive with all the tensions in Russia right now, the need to up social programs, et cetera? Can they really stick this out for several months?
I think they can for several months, but not for much longer than that, because you're right. They do need the oil revenues for much of their national income, but not as much as Saudi Arabia.
True.
Saudi Arabia is even more dependent on those revenues to keep the state running and to provide all the subsidies to the Saudi Arabian people that the oil produces.
Yeah, which is interesting, John, because Aramco, which was like the longest awaited IPO in almost history, finally came out, and now you get this situation. With respect, John, to our U.S. oil companies and our U.S. situation, I mean, look at Exxon, Marathon, some of those companies today, absolutely blasted. Let's talk a little bit about the dividend income that a lot of folks rely on from these stocks. I mean, from balance sheet machinations, and as you know from being where you've been in your career, can oil companies help, say, cover even debt instruments with some of that dividend income if they have to cover them? I mean, can we talk a little bit about some of the capital flows that they can change to help kind of weather the storm as things crater?
I think you have to divide the industry into two camps. One is the camp that really thinks in advance as to their dividends and manages their capital plans in order to support their dividend policy. And they will have the cash flow in order to maintain that even at low oil prices. Then there's the other camp, which are the highly leveraged. Many private equity firms got into the shale business. You got the oil field services folks who make the equipment and so forth. They're going to struggle with both loss of volume and price reduction, trying to serve what the industry is still trying to do. Capital spending will be reduced. Those folks in the second camp are going to have a very tough time if they're public companies making their dividends.
Hey, John, it's Zachary Carabell. Just a quick question about Mohammed bin Salman, who shares, I think, some of the blame here along with Putin, particularly given that he's in the middle of yet another, it seems like, palace coup that's going on simultaneously. So I know you're putting a lot of the onus of this on Putin, but what about our erstwhile and supposed ally in Saudi Arabia, Mohammed bin Salman?
Well, the challenge that Mohammed bin Salman has is that he thinks he knows more than he knows. And when he gets upset, he has a tendency to throw his toys out of the pram. And so he gets upset and he gets intolerant, and then he makes very bad judgments. Remember, the whole setback to the oil industry began in 2014 with Mohammed bin Salman at that time trying to put the shale industry out of business in the United States. He failed miserably, and he chewed up a whole lot of sovereign fund in the Saudi Arabia sovereign fund. Now, they haven't fully recovered their sovereign fund, and now he's back at it again. So he doesn't learn very quickly, and I think that's a big problem for the kingdom.
Gary?
John, this is Gary Culp. I'm not worried about the big guys, but I'm noticing in the market some of the other names have their bonds cratering and a bunch of stocks trading below $5. That tells me something about what the markets think. Are you worried about some of these companies going into bankruptcy because of what we're seeing on price now?
Well, we have to. In the 2014 aftermath, we lost about 150 companies to bankruptcy. This is going to set them back even further. Remember, the banks have gotten very stingy with loaning money to people in the shale business, particularly those that have weak balance sheets. So there's just going to be a drying up of funds.
Yeah.
And with all the other commitments, I think we're in for some serious rationalization in the industry.
Hey, John, very quickly, we got to go, but how important is the slowdown of the Chinese economy because of the virus to the oil business? I mean, they were really depending on China to be eating up that oil, and they're not going to be doing it.
Not unless the China and India, as has been reported, start to stock up their strategic reserves. That would help a bit.
Okay.
And at the low oil price, it's a good time to stock up your strategic reserves.
John Hofmeister, I bet the airlines are doing exactly that right now. Thank you very much, John. I appreciate it.